always glittered as an investment class, and out of the various options available to take exposure of this asset class, the one which was most preferred amongst investor community was SGB, sovereign gold bonds, which was issued by Government of India. Now, recently, Government of India has discontinued the issuance of sovereign gold bonds, although last sovereign gold bond was issued in February 2024, but it was expected that the government would come up with a new tranche of the sovereign gold bonds, but they have clarified in this budget that now they are discontinuing the issuance of sovereign gold bonds. Now, obviously, gold as an investment class is a very good asset class, and you should definitely take the exposure of this asset class in your portfolio. Now, after discontinuation of SGB, what could be the best way in which you can take the exposure of this asset class? Out of all the available options, one is selecting the best way out, and out of that best way, for example, if we are saying the ETF is the best way now, so out of all the ETFs which are available in the market, which one is the best for you to invest? Let's answer all these questions in this video, but definitely for complete understanding, it is very important that you watch the video from starting till the end. And to save on the time, I have kept the video content very precise, very crisp. I hope you would like the video. If so, please do comment and tell me if you're liking the video, or if you see any area of improvement, then also please do comment and let me know. Also, don't forget to subscribe the channel if you have not yet subscribed, and in case you like the video, please do like and share. Now let's get started with the video. So we would be covering in 4 parts. First, precisely we would discuss why gold has always been a preferred asset class. Second, we would be discussing what are the available options to take exposure of this asset class in our portfolio. We would be discussing what is the best available option now to invest in gold and how to take maximum benefit out of it. So let's get started with the video. We would be covering all the aspects including taxation related to your gold investments. So please stay tuned, watch full video. Let's get started. The first part of the video, why gold has always been a preferred asset class. So on your screen, there are 2 charts which shows the performance of the gold as an asset class since 2005 till 2025. So yes, we are here covering almost 20 years, and if you see, the growth is consistent. The chart almost is consistently growing. Volatility is very less. If we compare this chart to Nifty 50 chart or even reality chart, the volatility is much more in other asset classes as compared to gold. So gold has delivered definitely consistent returns over a period of time and has given very good returns. So this definitely is one of the reasons why gold has always been a preferred asset class for investment. Second, gold in India especially holds a lot of emotional value. It is a matter of pride that how much gold a person holds in India. So that aspect is also there. It also provides you hedging against inflation. So in a country like India, it is very important keeping in mind the inflation, that hedging has to be there in your portfolio if you want to create wealth and if you want to get good returns over a period of time. Also, the next reason is gold has always been considered as a global currency. You go out of India, you go anywhere, gold would be acceptable everywhere and would be valued equally everywhere. So this has always been a global currency. If the country is getting affected, is going through economic turmoil, the value of the currency of that country might deteriorate. The value of the stocks might get deteriorate and in fact get depleted. Real estate, obviously, if calamity happens, earthquake happens, so the valuation would go zero. But gold as an asset class, if you are able to secure the gold and you are traveling anywhere over the globe, the gold would be valuable. It would be a global currency. and that is the reason it has always been considered or looked upon as a safe haven investment. And therefore, whenever there are times of uncertainties, wherever there are geopolitical tensions, wherever there are warlike situations, in all such conditions, when there is any kind of uncertainty, the rate of gold shoot up, because gold is always considered as a safe haven investment option. So these are the reasons why gold is always preferred as an asset class, and why it is important for you to take exposure of gold in your portfolio if you are not already doing it, or you have just recently started making your portfolio. It's very important that at least 10 to 15% of your portfolio you allocate to gold. Coming on to the second part of the video, what are the ways in which you can get invested into gold? The first and the foremost way is definitely buying the physical gold. Physical gold you can buy in the form of jewelry, in the form of gold coins, in the form of gold bars. This is the most preferred option in India because of the emotional value and the pride in flaunting the jewelry. But if we are talking about investment, then jewelry might not be the best way to invest in gold. First, let's discuss the ways of investment in gold. So we have discussed physical gold. Coming on to the second, that is digital gold. So this is very similar to the physical gold. The only difference in digital and physical gold is, in digital gold, you won't have to face the hassle of carrying and storing the gold. The security reasons, that would be abolished. In physical gold, if you're buying jewelry, you would be end up paying make charges plus GST. That is negative. In digital gold, you would save on the make charges, but you would have to pay the GST. The third way is gold mutual fund, in which the mutual fund houses, AMCs, what they do, they invest in gold ETFs, or they invest in the different stocks or ways in their exposure to gold as an asset class, so that they can mimic the gold movement, the prices in the mutual fund. So the mutual fund would come with the entry and exit load plus the charges of maintaining this fund. So this is also a good option, but the best option now available is gold ETF. What is gold ETF? So gold ETF is just like a stock which is listed in stock market. Gold ETFs are also listed in stock market. The underlying asset is gold, so they mimic the prices of gold exactly. When the gold prices go up, the rate of the gold ETF would also go up. Gold prices would come down, the rate of gold ETF would also come down. Charges wise also, if we see, it is the one option in which the charges are minimum. Only expense ratio is applicable, and that is also very minimal. Like you pay brokerage when you are trading in stocks. Similarly, there is minute expense ratio which is payable. After this was SGB, sovereign gold bonds, which was definitely the best option, because in that you were getting the interest of 2.50% per annum over and above the movement or appreciation or in gold prices. So there were many benefits. Tax benefits were also there, but now since that asset class is not available to buy, there's no point for fresh investments if we talk about SGB. But yeah, the people who are already holding SGB, let me tell you, SGB came with a lock-in period of 8 years. So now government has come up with options. You can sell the SGB before the maturity also. So if you sell it in the market, then you would be liable to capital gain tax. But if you are selling it in the window which is opened by the government, I'll show you the chart on the screen for the window, which is like when you can sell which series of SGB. So, but I would say if you don't need funds, it would be better if you can hold it till 8 years, which is the maturity time. Because anyway, the prices are going up, have a lot many tax benefits also if you will hold it till the maturity. Coming on to the gold ETF again, this is the best option available as of now. Why? If you look at the chart, if you look at the cost, that is minimum for gold ETF. If you look at trust, so see, jewelry and coins and bar, from where you are purchasing, on that it depends on how pure the product would be, trustworthy or not. Digital is a safe option to invest. Gold mutual fund is safe option to invest. Gold ETF is also safe option because gold ETFs are regulated by SEBI. For example, 1 unit of gold, if you have bought in gold ETF, So for that amount, the ETF needs to have the gold. So, and all these is checked by SEBI. So it is a safe option. The hassle of storage definitely is maximum in case of the physical gold, and is minimal in case of all other three options, because they are all three digital options. Coming on to the returns. So returns is least in case of jewelry, coin or bar, because of the charges which we discussed, make charges, GST, etc. In digital also, returns are lesser. Gold mutual fund is better as compared to digital. Digital is better as compared to physical. Gold mutual fund is better as compared to digital, but the best is gold ETF, in which the returns are maximum. Definitely, gold ETF is the best option available. Now, coming on to how do you select which is the best gold ETF out of all the available listed ETFs. So see, if we talk about the returns, moreover, all the gold ETF would give you similar returns. Why? Because all of them are mimicking actual gold prices. The underlying asset is same. So it does not matter which gold ETF you are selecting. Now, on what basis then you should select your gold ETF? On two parameters. First, if the which gold ETF is having maximum volume of transactions, that should be the preferred option. And second, the expense ratio should be minimum. The gold ETF in which the expense ratio is minimum, that should be your preferred option. So this is how you can select the gold ETF. Now, if want to compare the gold as an asset class from all other different asset classes, that chart is also there on your screen, and you can see that gold definitely has given considerable returns. If we look at the returns for 1 year, 3 year, 5 year, 10 years, so gold has proved to be a very good asset class as compared to debt funds and equity funds. So definitely you should take exposure of this asset class. Hope this video would be beneficial for you. If so, please do let me know in the comment section, and don't forget to subscribe the channel and like and share the video. Thank you so much.